everybody. Quite an eventful week last week and still a lot more to come. So what I'm going to do is just piece together what I'm seeing in the markets and look at some of the key internal indicators as well, and look at predictions for the week ahead and the rest of the month as we get into the end of June and early July. So you can see I've marked off, we've got US GDP, Bank of England and services data this week. Rising inflation concerns, hence the reason why the bond market created this wobble on triple witching back in the last week. And the focus on Thursday, weekly jobs, they are still slowly improving. So does that underpin the markets? Well, let's take a look and see what the markets are telling us. Let's start with a weekly Nasdaq. So you can see this funnel pattern I've got. We fell out of it in middle May and turned around, and we're just grinding higher, we're just holding up. So we had a significant push up at the back end of May, and those May support levels have held, and we're just back into this resistance level. We actually made a new all-time high last week. So all the time the Dow was selling and dipping, this one was still holding up. We're on a knife edge though. You can see this knife edge by this trend line. If we close under here anytime soon, we could see a potential 10-20% correction. In the meantime, there is no reason to sell. Volume is increasing, which is, to me, is a vital ingredient. It's the oxygen of the markets. RSI is high, but you can see the momentum in this MACD is beginning to pick up. So we could potentially accelerate up here. We've got US GDP this week, as we just said. So if the GDP number comes out okay and the weekly jobs hold up, there's no reason why this market can't push higher. So you can see on this daily chart, a bright start to the week. Obviously the US have not even got to their desks yet. They're just beginning to get to their desks. If we pull back to 900 and hold, then I think we can break higher. So that's the daily Nasdaq. Dow has suffered this sell-off. So we've seen a move into tech and small caps, and that's left the Dow high and dry. However, if this Dow can come back and sit on this trendline support and this holds, then if we close at above 39,000 anytime soon, then we could start to climb and break out of this pattern. So there's the structure, the technical structure in the chart. If we do continue higher, 34.5 is going to be a barrier. However, we've not even got the US at their desks. We're not even opened so far on this initial bar here. So this is just the overnight Asian and European response to the market. If all we're doing is pulling back into this resistance and we close lower, then this Dow is looking, its next stop is potentially 32,000. So today's close is going to be interesting, but given what we've seen in the European markets, very nice bounce in the European markets. DAX is up from 275 to a high of 565. Again, all we're doing is retracing into the sell area from last week. But if we close anything like this, anything above 400, and we could at least come and test the highs. In the meantime, this is a fragile chart. If all we're doing is pulling back, retracing, and we subsequently close under 400 anytime this week, then expect that to head down to 14.9 and possibly lower. Alright, but the Dow's got to have, let's go back to the Dow a second, the Dow's got a habit of doing well, holding up, and then falling right back into these trend lines. We did it in January. We did it all the way back in November. So this is a typical pattern of the Dow at the moment. So yeah, eyes are fixed on that. Right, quick look at the FTSE. Sitting on this key support. So you can see how important that close is going to be today. I just want to talk about the bonds before we move on. This is a US bond ETF. It's a very similar pattern to what we're seeing on the 2 and 5 year Treasury notes anyway. So I'll just use this as an example. So you can see how the yields increased as we drop down here. So if bonds are selling, the yields increase. Otherwise, there's no incentive to hold the bonds. The bond market collapses. So we've seen this recent blip lower in the bonds into support. If these bonds pick up, then that is risk on appetite. However, if these bonds roll over, then that's when the correction could really start to see a continuation. So you need a healthy bond market to sustain the incredible levels of debt that have been created in this pandemic. And so that's why I think these bonds are so important. So keep an eye on these bonds, because if this little high into the resistance doesn't hold, and this drops back and yields increase, that could see traders head for the hills, head for cover, and withdraw some of their risk from the market. Right, volatility index. Let's move on. Volatility index popped up. Currently, let's hit resistance and dropping back. So you can trade this and measure this in just the same way as you'd measure any technical chart. So if this, so if we continue to see that slide back into these lower levels, then that is risk on. If we stay at these highs and break up to 25, 26, then we are in a risk off environment. Like I said, at the moment, I think that we are still in a difficult position in terms of where the markets are. It's a typical profit-taking period of the cycle anyway, the annual cycle, and with inflation and rates potentially going to increase as we get into next year, 2022. And the Fed basically said they want 2 rate rises next year, which spooked the markets. So I mean, this is a mid to late part of the cycle where you would expect to see an increase in interest rates, an increase in inflation, and a move into some of the smaller stocks and out of the big heavyweights. I forgot to look at the small cap index in the US, and you can see this had a really good run. Oops, I keep doing that, so I keep grabbing the tool, it doesn't work. So you can see so we're pulling back into this funnel pattern. If we continue up here, this is really bullish. If this Russell index can close above 2270, that's very bullish. And likewise, if the sell continues from last week, then that could be further confirmation that the sell that we saw last week is not over, and a full-blown correction could be underway. So gold got battered because of the turn in the dollar. So here's the dollar index, punched higher. If you ever see gold and dollar punch higher at the same time, run up together, breaking the usual divergent relationship, that is very, very bearish. That means the appetite for risk is off, is definitely off overall. Of course, even in a downturn, you still get stocks can push higher. Yeah, just watch out for that. Right, silver had a deeper than expected pullback, but only to the 50% of this. So 26 is a very important level. If that can hold, if we can hold that level, then we can break up above this 26, then we might at long last see that 30 coming. But in the meantime, that is right on the edge. Path of least resistance, so you would have thought, well, I would expect that to hold. However, if it doesn't, if we close under 25.5, then expect a full-blown pullback to 24 and maybe more. But that's a very neat pattern. If we can hold here, then that bodes really well for silver. Even the beans saw a dollar drop last Thursday, was it? Yeah. So we dropped from 1362 to 1262 and back into a support area. So the strong dollar tugged this back, which is good. I've been looking for a pullback in the beans, so I'm going to get interested in this. I would very much like to see that come down to $12. I'm currently sitting at $13, so not that big a drop. And I am in some wheat, but I would like to add. So if I get a chance to see a deeper drop in wheat, I would be very interested. I think there's a bull flag. If we start to close above 650, then I'm going to start buying into that, and I hope to see whether we can break 770 and go to $8–9 in the wheat. All right, let's get on to stocks. So the UK, the standard UK list is still holding up. BT is just around the £2 mark. As for profits, I mean, you have to have your own individual exit strategy for this. £2 is a big move from the 94–95 level that we saw the back end of last year, last autumn. £2 is a big round numbers is always an issue for market. So the aim is for you to have your own set targets on this in line with your own trade plan. Me, yeah, like I said, £2 is a big round number in the US, in US and any markets, global markets, is always going to be a potential area of contention. So you could take half off, you could just take all off. I don't know where this market's going to be tomorrow. I don't know where it's going to be in the next hour. I don't know where it's going to be in the next week. All I do know is that this has had a really good run. There are some divergences up here, so we are seeing a lower potential momentum in this market because it's hit this big number. So if you are a short to medium term investor, you should be taking at least some off, if not all off, at £2. If you're a longer term investor, do nothing, sit tight, make sure that whatever stock you're in has not got a sell signal. Volumes are not great up here. Since this big push up in June, it's been sitting up there, but this is UK stock, so you tend to get lower volumes in UK stocks anyway. But in the meantime, all of these stocks I've been looking at are all holding up. They're all doing what I expect. Rolls-Royce has hit an issue with 112, 113. That's pulled right back to 105. 105 was always a big number, has been a big number in this grind higher anyway. So we've come back, so we've hit some resistance from April, pulling back into May's support. It's a question of whether we can hold around here, hang around here, and then build up and start pushing into 120 plus. Sorry, but I am holding Rolls-Royce for the longer term and looking to see if that can continue the recovery. Let's look at BP. It's had a nice run into 336. I didn't look at oil, did I? So we're pulling back into May support. So this is so sell in May and go away. Well, we had a decent run into June, and June has sold off. That's fairly common in low summer volumes. So, like I said, you need to come into if you are going to buy a stock, you need to know what you're looking for in that stock. And 330, 340 is an area. We've just closed the gap at 325, and we've hit resistance at 335. So this is it's getting a pullback, and we could continue this pullback in the short to medium term, but it's a good stock. It's holding up well, but it is experiencing typical cyclical pullbacks, as it is these banks. Lloyds hit 50. We've just seen 45. We could come as low as 44 or more. There's a gap at 43.50, sorry. At the moment, it looks as if that could head for that gap, as from what I'm seeing at the moment. No telling. It could turn around here and go right back to 50 and continue higher. But it's seen a lot of weakness. We're coming down on volume. That could come lower. Other UK stocks, IQE is not doing it. Money Supermarket, that has hit a lot of resistance in the last couple of weeks. Yeah, at the moment this looks lower. So we hit a lot of resistance at 278, 280. Currently, with the markets open, we are 262. At this stage, it looks likely, given the lower volumes as well, that we could come all the way down to 250. It is not looking. We've broken some support there. So if you're in this, consider what you want to do. Are you going to come out? You're going to leave it and sit tight? What are you going to do? You need to have a clear idea about what you want from that stock if you are in it. Right, let's look at the miners. Before I go, let's just flick through some of the bellwethers. Sainsbury's doing really, that's had a good move. If you're not in it, sit tight, because that's 269. 260 is the gap now. So a fantastic buy signal back there in March at 216. It's likely that will want to pull back and fill that gap. The M&S sitting on support. I don't like the M&S as a stock anyway. Right, next, struggling, really struggling, coming down on volume. If you're a fan of next, then have a look out for 73.50. Easyjet holding up, not looking great. Stocks, UK stocks I do like. Let's look at the miners first. POG. You know what? I think that's okay. Happy to be in POG. I will add if that starts closing above 26.27. Pan African. It had a major problem with 22.70. Hit a lot of resistance, but has pulled right back to key level of support. I will consider adding to that one if we close above 18. Fresnillo, struggling, really struggling. Sentiment, I'm not in these, I'm just looking at them. Polymetal, yeah, Polymetal might come as low as 15, 25, 20, 30. It's had it's had a good run, 17.28. But that is really come off the boil. ENPH. Let's start to look at US stocks. This ENPH, I'm pretty sure, yeah, this must be the right stock. Doing well, bumped its head into, so it's retraced, done a boomerang trade right back into this 28th drop. Almost, give or take a few pips. So again, if you're in that stock, who knows? That could be all it's going to do. Big drop, pull back. So if we can't hold that, we start closing under here. That could fall all the way back. RSI, relative strength is high, and relative strength doesn't mean to say it's going to sell. Relative strength means it's a strong stock. So we're at an important pivot on this one. So ENPH needs to, it may pull back. Volumes are good. Volumes are increasing, so it's coming up on volumes. That's bullish. We keep closing higher, bullish. We just have an issue with this price on ENPH. The ones I like are Baidu. The other chart package I looked at showed this as volume increasing. This one is not. We're obviously at an increasing, an interesting point on Baidu. So if we can hold this 185, I think we could start to motor. But it is not a confirmed breakout. You can see we're under this trend line. All the time we're under the trend line, we could fall out, fall lower. But I like the stock. I will add if that one works. Teledoc. I'm buying into this Teledoc at the moment. This is a bit of a sort of a head and shoulders pattern. Volumes are increasing. MACD's above the midline. We've got a gap fill up here close to the 200 mark. I think this is a good stock. I think this could start to reclaim its some of its lost ground. If we close under 150, then that story could change quickly. So if you're going to get into this, buy as close to 150 as you can, get your stop underneath at least 130, and see if we close higher. And if you get stopped out, leave it. All right, it's all about risk management. Everything we do in trading is about risk management, if you haven't already sussed that. Right, let's look at some of these high growth US stocks. So Skills ran up to 24.60 and is pulling back. I think that might see 17. Obviously, if you're in this, if you started buying this at 12, that 23, 24 is a major resistance area. So if you bought the low and took it off, great. And let's face it, it's been on a big run. That low was 12. It doubled. It doubled from 13th of May to the 9th of June. So if something's doubled, if you doubled your money, would you take your profit off the table? I would. Would I buy back on a gap fill at 16? Yes. So simple exit strategies. I see too many people get into stocks without exit strategy. PLTR. Grinding higher. Massive buy signal there on the 11th of May. We spent a week pulling back into that well, 2-3 days pulling back into that range at 18. We've seen 26, 27. Volumes are good. It might well pull back to 2022. Not a brilliant chart, it's a bit scrappy to me. But the volume does suggest it could continue higher. I just get nervy when you end up with scrappy charts like that. Fubo, very similar. Buy pattern on the 11th, pushed up into resistance at 30. It might, if it doesn't hold this, if we don't keep closing higher, then we might see 20 again. Square. Square's had a good push back to 193, currently seeing 240. I think any pullbacks to 223 might see that get to 285 plus on Square. PayPal continues to grind higher, hit resistance at 277 and close higher. Volumes are good. Any pullbacks to 272 are potentially viable. Etsy, very flat, still not broken out of this drop zone from the 6th of May, but volumes are increasing. So if we can just close above this area here at 170, that might get back to 200, 220 plus. Let's look at bar. It's attempting to hold down here. Let's do an update on these chart patterns. Tell you what, let's just fib this whole last range. So it's got all this massive support underneath it. Every time we come down to 200, 204, it appears to get bought. Recent volume suggests this dip may be over, and it may about to attempt to get a little bit higher up there. We need to close above 230. If we close above 230, you might see the volume come into that. So I think it's worth the risk. That's all I can say at this stage. DocuSign. Now this is what you want. Decent volume, much better higher closes. PLTR and Fubo and Skills haven't got this. That is going on. That's a really nice run. Recent highs are 289, so we come from 180. If we get a decent pullback on that one, 250 say, at this stage I'm not sure you're going to see 250, but I certainly wouldn't chase it. I would not buy that high, no way. Just my own personal style of trading. Bristol Myers, broken above this resistance. This to me is a pullback area, 65. I'm hoping that's going to end up at 70, 73 plus on Bristol Myers. Let's look at something like Zoom. I still think Zoom might, volumes are not great. I still think Zoom might pull back a little harder before that's ready to go. I'm liking this SEER. Not talked about SEER up till now. We've dropped from 86, we're currently 32. Volumes were good last week when the Dow was selling. So if we can hold here and close above 34, I think SEER is got some real potential. I'm liking SEER a lot. This is path. Let's fib this one. You see this, all the support is 68. We've had a higher 90. Volumes are looking good. I'm liking this one on the pullback as well. Whoops, didn't mean to do that. What I did mean to do is this. They're in this little apex. If we can break out of this little apex, that could get back to the highs. So I'm liking path a lot. This is another growth stock, IRBT. Struggling, but it has been as high as 197. If we can close above this 100 mark, I can see that getting retracing back to at least some of these highs, if not all of them. Unconvincing volume at the moment, but short term, but longer term that may well do it. I'll make this the final one. I have got a lot more, but I'm not going to limit the time I spend on this video. This is KTOS. If we can hold that support at 25, 26 and close above 27, this might go on a run. Might. So I'm liking that one. I think I would buy a dip. I would love to see that come back to 25. So I'm going to be patient on that one, and that's where I'm going to leave it. Right. Midweek review, 6 PM Wednesday. Drop me a line if you haven't got the link for that. And watch out for the workshops I've got coming up. Got a workshop on Tradeonomics, so I'll give you the link to that one. Game-changing indicators. This is all about how I look at internal factors which could affect the overall market. I'll send you a link to that. It is on the 24th, this current Thursday, and I've got a whole series of workshops over the summer, so I'll link you all up to that and let you in on that. Alright, thanks for joining me. Bye for now.